And joining us from Singapore, we have Thomas Harr of Standard Chartered Bank. And I guess, Thomas, if at first you don't succeed, you try again. And that's exactly what the Japanese government is doing. How effective do you think this round of intervention might be?
No, I don't think it is that effective. I mean, I think they will try to do it. We are probably around the area where they are likely to do it pretty soon. But you will see a short-term bounce in dollar-yen, and then the pressure, downward pressure again, because the U.S. economy and the data there is clearly falling off a cliff at the moment, and that's what the market is focusing on.
Yeah, the last time they intervened in the markets, Japan did, they had to spend $50 billion worth. I mean, why did they keep piling money into this sort of intervention in the currency markets if it doesn't work?
I mean, you can say if they hadn't intervened and you don't have the threat of intervention, you will probably have dollar-yen already at 70. So you can say in that respect it does have some impact, because there is a risk of being short dollar-yen with the risk of intervention. But to push dollar-yen higher, that's going to be a very tough job.
Okay, so what's the bottom here for the yen? I mean, how much stronger can it get? We heard from Mr. Yen saying maybe below 70. Your thoughts?
I think at the very short term you can definitely see it grind lower to something like 73, 74, because clearly, I mean, the market is focusing on the weak US data, US interest rates to stay very low for a long time. These factors cannot really go away, and then of course you have the ongoing risk aversion in the market. But of course, if they intervene, you can see a short-term bounce by 2-3 figures, but then the downturn will start again.
Okay, there you go. And let me ask you about Jackson Hole, Wyoming. Of course, we're expecting everyone, the world is trying to focus in on what Bernanke is going to say. What's Standard Chartered's take, and what's the effect going to be like in the currency markets?
Our take is that eventually we'll probably get QE3, and that will probably happen by Q1 next year. So I think you will probably see early signals of that. We do think that you should see overall asset markets starting to find some kind of floor or stabilization maybe late this week. But until now, of course, you still have a lot of upward pressure on the dollar, on the yen, your usual suspect in terms of safe haven flows. But we don't think we are too far away from some kind of stabilization in, for example, currency markets and, for example, Asian currencies.
Okay, so what does that mean? If we're going to get QE3, does that mean more dollar weakness?
Yes, definitely. I mean, that is clearly a dollar negative factor, especially against the emerging markets. We do see value in emerging Asian currencies at these values, clearly, basically across the board. But of course, the key factor is, will we have a sharp US recession? Because then, of course, some of these dynamics start to change.
Okay, so Thomas, I guess in anticipation of what's going to happen at Jackson Hole, what's your recommendation on the currency markets before Friday and then after Friday?
I think at the moment it makes sense to focus on the more defensive currencies in emerging Asia. If we focus on emerging Asia, that would be the likes of Chinese Yuan, that would be the likes of the IDR, the Thai Baht. These are more defensive currencies. I think that makes a lot of sense. If we do get a rally in risk, I think it makes sense to scale more into the likes of Korean won and INR, or even possibly the Aussie. But for now, I think it makes sense to focus on the defensive currencies.
All right, Thomas, thanks for sharing your thoughts this morning with us. Thomas Harr, Standard Chartered Bank's head of Asian currency strategies, joining us from Singapore.